Hello, today I will show you the 3 most undervalued companies in the Nasdaq-100. From my research, I noticed that there aren't a lot of companies that isn't trading at either fair value or overvalued. However, I found a few companies that currently are trading on a discount. The third most undervalued company on my list is Amazon, ticker AMZN. Amazon is predicted to make 4.13 in earnings this year, giving the stock a PE of 40. However, Amazon are looking to grow its earnings with around 24% per year. If they can manage to do this for 7 years, the price per earnings would be under 10 with today's stock price. Amazon has proven they can grow their revenue by a lot over the long run, and now they are looking to grow their profit. Something I don't like to see is that the total shares outstanding has been increasing with time. Not by a lot, but still increasing. Overall, Amazon is a great company with a good balance sheet that are growing their top line and bottom line fast. I think a fair value for Amazon would be $185 to $200, making it undervalued by 10 to 20%. The stock have a 52-week implied volatility of 30%, making it a decent stock for option selling. The second most undervalued stock in the Nasdaq-100 is Google, ticker GOOGL. Google has been growing their revenue every year since going public in 2004, and also its earnings per share has grown with time. In 2024, Google are looking to make $6.8 per share in earnings, giving the stock a price per earnings ratio of 21. This is very low considering Google has proven it can keep on growing year after year. The projection is that Google will grow its earnings by 15% annually in the coming years. This means in 5 years, Google's price per earnings would be around 10.5, or in 7 years around 8. Google also has an absolutely incredible balance sheet. What I also like about Google is that they are sitting on an enormous cash pile that they can buy back shares with. This graph shows that they have been doing exactly that from the year 2018 and are continuing to do so. Overall, Google is a beast of a company that are printing more money year after year, and the stock is trading on around a 30% discount from the fair value. The 52-week implied volatility is at 27.5%, making it a decent stock to sell premium on. The third company, and the company I think is the most undervalued in the whole Nasdaq 100, is PayPal, ticker PYPL. In 2024, PayPal are projected to make $5.1 per share. However, this is a conservative projection by the new management. This would mean a price per earning at 11.4. Even if the earning comes in at $5.1 per share, the earnings are expected to grow annually by around 9%. This is an extremely low price per earnings for a company that has low debt and a great balance sheet. If PayPal can grow its earnings as projected, the stock would be trading at a price per earnings of under 7.5 in 5 years, or a price to earnings of 6 in 7 years. This graph shows the revenue growth of PayPal for almost 10 years. We can see the growth are persistent. The next graph shows the amount of shares outstanding. PayPal has from the year 2022 started to buy back a lot of shares. This year they will buy back shares for at least $5 billion. PayPal's market cap is $62 billion, so if the stock keep trading at $58 or under for the rest of the year, they will buy back at least 8% of the company. Overall, PayPal is a growing company that are buying back a lot of shares. With a fair value at $90 to $95 per share, the stock is trading at a discount of 65 to 70%. PayPal has an implied volatility of 38.8%, making it superior for option selling over both Amazon and Google. Of course, a company cannot be valued or researched only with the information I have provided, but I didn't want the video to be 6 hours long. Remember, these are not stock recommendations or financial advice in any way. I am not a financial advisor, and I have zero education in finance. Thanks for watching. Remember to subscribe.